Assalamu alaikum wa rahmatullahi wa barakatuh, viewers. Today we have with us our first ever podcast from ICS. With us is Mr. Abu Larry.
Hi guys.
Assalamu alaikum, brother. How are you?
Walaikum salam. I'm good, thank you.
Okay. So just a little bit of introduction for Abu Larry. Abu Larry is actually the one who made me enter into US market. He has been trading just like about 5 years ago. His experience in US market, and he has seen many ups and downs, and I'm sure he has blown some of the accounts. We can hear about him in our podcast a little bit. This podcast is one of the first episodes that we are trying to do, and what we would like to hear from you is what topics you want us to discuss. So don't forget to like, share, and subscribe to this channel, as well as also do comment down below to tell us what you want to hear from us. So, well, today what we are trying to discuss with Abu Larry is the situation of market. So, Abu Larry, how are you? I will give you some time to just a little bit. I want some insights from you. What is going on in the market? Well, as you see, we have like very huge negative news coming in the market itself. The macroeconomic factors, such as we are having like a negative GDP, we have a higher consumer debt ratio, as well as we also have an inflation. The food that is going on between the Fed and the Trump administration, as well as the recent downgrade for the U.S. credit rating for the U.S. bonds, which is from the Moody's itself, and so many other things that really scares a person. So, what your take on this, Abu Larry? Go ahead.
Thank you very much, Abu Haroon, and welcome guys to our first ever episode or podcast of ICS NASDAQ sessions, whatever you want to call it.
What do you want to call it? You name it, and it would be.
Allah, we will decide the name as well.
Yes.
Forward, but yes, rightly said. There are too many negative news, negative scenarios, or negative things hitting us from everywhere. Now, our recent negative news was about Modi, as you mentioned, and we didn't see the impact right away. I think it was done after the market closed on Saturday or Friday, and Monday we were expecting a big drop. Technically, we were looking into Nasdaq, and we were thinking maybe some gaps will be filled. But nothing happened. And now, as the week progresses, we saw a little bit of impact coming up. Now we dropped from 19,200 to 18,700. So yeah, things are not going well news-wise. US, I was just reading the news. Trump has hit back on EU with the new tariff strategy or a new tariff number, and he is not happy with how EU is dealing with US, and he has clearly displayed his distress, or
So they
we
are
can
again playing the tariff card.
yes, the Trump tariff is back on the board again, or
Oh
for UK,
my.
back on the table again.
Oh
So
my, I'm so scared with that.
So moving forward, so what is my take on it, guys? You can see Nasdaq is in front of you. You can see a chart, which is a monthly Nasdaq chart, and you can see from the. So my chart is open from 1984. So since 1984, many atrocities, many economical situations, many recessions have passed, and you can see them as big red candles or dips along the way. But
What's
if
this huge drop
oh,
I'm seeing in front of me? That's the 2000 crash. Oh
that's
my. Oh yeah. Yeah. That's the 2000 crash. Yes.
that's a 2000 crash, and this is where I want to show you this. That's why the chart is in front of me. That whatever the crash is, whatever the problem is, whatever the news is, the market always recovers. The market always stay very close, very down to its average. What I mean by average is maybe if I turn on some averages right now, you can see the market is very much close to its averages.
The blue is the 200 EMA or something?
The blue one is 200 EMA. I'm not sure if it will work with the weekly time frame, or sorry, monthly time frame. The black one is 50-day EMA. Again, this is not, maybe it will work fine with daily time frame.
Mm-hmm.
But anyways, the point is that whatever happens, the market always recover.
I'm
So
seeing it's very resilient. You see, after the fall of even the 2000 crash, where everything was very ballooned, it recovered from there. And
yes,
even from the crash of, I think, 2008, that was, I think, the housing crisis, it also recovered from there very fairly quickly.
yes, this is where the crisis started. This is where, and it recovered very quickly. And
Mm-hmm.
you can see there are many occasions where it crashed,
Mm-hmm.
then recovered, actually went back above its previous highs.
Yeah. So it's like a show must go on the Wall Street or something.
Exactly, the market always recovers. You have to stay invested. You have to keep on accumulating on stocks, fundamentally strong stocks, or S&P 500. Okay, if you're not clear about some stocks or some companies, just buy the whole market.
So when
So
you're seeing S&P 500, for our viewers who are actually, what we are concentrating on is, we are trying to concentrate on investing in halal. So what do you say that when you say buy the SPX or something? So we can't buy SPX because it's not halal. So what do you suggest we would be buying then?
so for halal S&P 500, there are two ETFs publicly available, publicly traded. One is HLAL. So this is a combination of all the S&P 500 companies which are Sharia compliant, and the other is SPUS. This is also S&P 500, but Sharia compliant companies only. So
Yeah.
you can go to them, you can search them out, and they follow the exact same pattern as SPY,
Sorry for
because
the
they
offshoot. Just go ahead and continue your case. What you were saying about the market resilience, what you were telling me about.
yes. So again, like we are seeing a lot of negative impact or negative emotions, negative sentiments. A recession might be there, a recession might come. Everybody is so scared of a recession. A recession will come, okay. Recession can come tomorrow, recession can come after 3 months. Nobody knows, nobody can time the market. But what we know, what we have in front of us, is the historical performance of the market. And you can see it has always been positive if you zoom out. If you're investing here and you want to get out the next day or the next hour, then this is not for you. And I'm not addressing those guys. I'm not talking about traders. We are investors and we are focusing on investments. Our horizon is long term,
Mm.
minimum 3 years, maximum 15 to 20 years. This should be our horizon.
Yeah, the ones who are looking at past the decade, less than a decade or 5 years, please don't talk to us. Yeah, that's what your ideas. But think about this, Larry. Now we know that the our the we are starting at the start of a recession, maybe. So it might be possible that we might enter a recession. So why not? It's very tempting for me to think like that, that I may sell all of my assets right now. And what I will do is I will go ahead and buy when the market is much more down from where my current positions are. What do you say about that?
Yes, exactly. That's so as a human or as an intelligent human being, everybody will be thinking like that. Okay, I am so intelligent and I know based on the news, based on many big names like Michael Berry. Recently, Kathy Woods came out and said, even though she's a uh, hyper bullish bull, she's the biggest bull what I have seen so far. But
Always being
first,
bullish on the market. Her
many
outlook,
many
yeah.
growth companies, many technology companies, she's always been bullish. But recently, she came out and said that there is a crash coming up, or we can see a 20% drop, or even more than that.
I think Michael Burry is the guy who predicted the 2008 crash, the housing crisis, is it?
Yes, he's the guy who predicted 2008 crash, and after that he failed in every other prediction. So
But still, there are so many people who are very, very famous, and they are much more in the market than myself. I'm talking about myself because I've been here in it for like about 1 or 2 years only. So if I'm looking at them and I'm saying, man, if these guys are panicking and they are selling everything off, Warren Buffett is staying in cash, Michael Burry has sold everything, and this gal that you talked about, they have all sold everything, and they are massively bearish. So who am I to predict and say that it won't go down and face the consequences? What do you say about that?
yes, so we are not predicting the future. We are not here to predict the future. We are only here to read the history, and we need to see history always repeats itself. It doesn't repeat itself, then it will rhyme. Okay, so I mean that was some sort of saying history rhymes or something like that. Anyways, so
The history
if
repeats itself, something like that, everyone?
yes, yes, exactly. So, anyways, if, for example, you try to predict the future and you say, okay, the dollar is going down, the geopolitical situation is bad, Trump is bad, recession is going to hit us hard. Let let me come out of the market and invest when the market will drop.
Yeah.
Okay, it will drop exactly what I need to be in, and this is where I will buy. So for this, you just have to go in the history and you need to see, like, if you are going to time the market, which you are going to do, and you are out of the market, how is going to impact your investments. So for example, if you have $10,000 invested in S&P 500, uh, and you are out of the market, this is how it will impact your growth. So, for example, if you have been invested all days, this is how your $10,000 will turn out to be.
Wow.
And if you miss the 10 best days, by the best days, I mean, for example, let me show you in the chart what does best days mean. So let's look at the recent best day, which
Yeah.
is second.
Yes, exactly. It went today, like a couple of months ago, a month ago also.
This one,
Yes.
on 9th of April,
Yes.
we we witnessed a historical event, which was the second best day of the entire NASDAQ history. And if you would have bought, and if you were keep buying, not scared of the market, if you are buying here, market is dropping, okay, I'm gonna continue, but just buying the stocks which I want, which I love, which by love I mean they are fundamentally strong stocks, which we, by the way,
Yeah, we have to analyze it quantitatively rather than our qualitatively. Like what we think about, it doesn't matter. What we have to see is what actually the company is doing. So that's what you're saying. You have to
exactly.
look at things objectively.
Exactly. So we'll come back to that,
Sure.
which companies we should focus on, and what companies we
Hmm.
should on why. Anyways, if you are buying the whole market, SPY, SPUS, halal on every dip, maybe you're not buying every day, maybe you're not buying every day, maybe you're buying every week, for
Hmm.
example. You are accumulating, and you reach here to the market bottom. We don't know if the bottom is hit or not.
Yes.
But then this day comes in and
Hmm.
you're invested in the market. This is what you're going to receive. This is what you're going
Hmm.
to make as per the chart. Again, this is what you're going to make if you are still invested in the market. If you miss the 10 best days, then this is your return on
Hmm.
$10,000. If you
It,
miss the 20 best days historically, which
hmm.
means you're timing the market, you're coming out, you're completely uninvested in the market,
Uh,
then you miss the 20 best days, you are making only $17,000,
wow.
and then you miss the 30 best days, and actually you are only making $1,000. And then as you move forward, you are going to lose money if you miss the 10 best days.
So actually,
So
what I'm seeing in this in here, if I'm trying to reflect on this, so in the 10 years time, if I just kept invested myself, I would be getting like 640%. But as soon as I miss the 10 best days that might be coming like 1 day per year on average, I would be losing like 50% of those profit. My profit is being slashed to half. And if I went ahead and I missed like 30 best days, which is like 3 days in 10 years, 3 days in each year for 10 years, I'm going to be staying the same. I won't be gaining any of the profits. So it's much better to keep invested in all of the bad times and keep investing into and like systematically rather than just facing the erratic behavior and coming up and down. As the market is going down, we go ahead and sell it. As it's trying to come up, we're going to buy it. It's like rather than timing the market, we have the better opportunity is to be spend the time in the market. What do you say about that?
Exactly. This is what I'm trying to show you guys that this is not the best decision. You have to stick to what is going on, what is going to happen, or what has been happening. Okay, you have one whenever in doubt, step out and zoom out. Okay, and then you will see what you can miss, what you can achieve if you consistently invest.
Yeah.
For example, you can see that this was a downtrend. Even if the market is in downtrend and you're investing dollar cost averaging, simply dollar
Yes.
cost averaging, your dollar cost averaging your ETFs, your dollar cost averaging your companies which you have picked up, strong fundamental companies, not just any growth hype based companies, strong fundamental companies you have picked up, you are investing in them. You know that you are buying them under their fair value because the whole market is in downtrend, the companies are in downtrend, that stock is in downtrend. So when you're buying with gaps uh, each day or a week or month, you are in downtrend, you're basically bringing your average cost down. And once the market hits the bottom, your averages are also at the bottom. And
It might be
from
near
there,
to the bottom rather than
near to
being,
the bottom,
yeah, it's
not exactly the
reasonably,
bottom.
yes, exactly. It's reasonably near the bottom of the market.
Exactly. And once the market returns, which it returns, which you have seen, it does come
Time
back.
and time again, yeah.
Exactly. When the market comes back, and you can see that
So like 100%, yeah.
within the matter of
96%.
yes, within the matter of 2 years,
Yes.
you have made 96%. Or even if you haven't made 96%, half of it,
Half of it, yeah. Yeah,
half of
exactly.
it, that will cover you for all the losses you were not getting, or sorry, all the losses you would think you were making in those days.
I
Your
think I just got 2 points for our next podcast, and our viewers may agree with that. Is one is the investment strategy using DCA, and the other is actually how to look at a stock and understand which are the companies are the best. How to look at those best companies and then invest in it. So continue with your explanation on this short, please.
Yes, so basically, in this podcast, I was trying to address, or we were trying to address the fears, the constant questions coming from our Discord members, from our premium members, that what to do now? The market has turned red. Market is going down. Market is saying this. Trump is saying that. Negative news, negative sentiments. Recession is coming in. This was the answer. This is the answer which I'm trying to give you. This is the picture
Mm.
I'm trying to show you.
So when everyone is afraid, go
Exactly.
ahead and
And
buy. Yeah.
we, we can simply go into the recent downtrend. Recently, what happened? You can simply see that what happened recently in this year, in the month of April, what has happened.
I think this
Uh,
is just after the Trump got,
Announced tariffs.
yes.
Just after Trump announced tariff, the market went down 26%.
Hmm.
Okay, a lot of
Hmm.
fear the whole US is not going to survive, the US is going to die, or the NASDAQ is going to die.
Yeah.
Nothing happened. Everything returned back to its all-time high, not completely all-time high,
Yeah, but
but
still very near to it.
very
Remaining
near to
like 3 or 4% left.
you can see that I can show you how much we have came back. We have so out of that drop, we have recovered 30%
I
from.
think you can measure from the top on that side. Yes, exactly.
Yeah,
I agree with you. We are just remaining a little bit. That's the 20% of that. So if you, yeah, it's like 3
yeah.
or 4% left to our all-time high.
Exactly, 3 or 4%
Yeah.
left. So this is the point, and this time was the most fearful time because tariff was completely new. Is completely changing the entire geopolitical situation of U.S. versus the rest of the world,
Mm.
and this was a very difficult time. But when you know that the market is going to recover from whatever it
Yeah.
happens, even if we go into recession, even if we go further down than that, we we will be positive. Eventually, this happened within a matter of weeks. We are now almost back, and
Mm.
now again, recent news, as you have mentioned, the GDP, CP,
Moody's,
Moody's,
Moody's rating, yeah, and all of this. Exactly, it's
maybe.
turning it down again.
Yeah, so this is the opportunity. This is the time when you buy. This is the time.
You mean we wait at least for it to go down, and we're not afraid of it. Once it goes down, we go ahead and pull the trigger.
Yeah, well, even if we don't have to wait to go for it to go down, we
Hmm.
can buy now in small chunks. We
Hmm.
don't have to do full shopping here. We
Hmm.
can small chunks, keep on the strategy we're going to discuss in the next podcast, the
Yes.
investment strategy. So
Yes.
that with that investment strategy, which we are going to reveal, uh, and with the fundamental strong companies which we share with our premiumship members,
Yeah.
uh, you are going to be positive. You will be positive in the long horizon
Exactly.
over a
Exactly.
period of 3 year, 4 year, 5 year, or 15 years.
Yes.
You will be positive and you will be sleeping like a baby.
Exactly, exactly. For our viewers, we just would like to mention, which Abu Larry just mentioned, our premium committee. It's like a small group that you are going to go ahead and pay just like for just $10 a month. You can be a part of community who is focusing on halal investment, making sure that we are doing it the halal way, as well as you might want to make sure that whatever you are investing in the right community. You're trying to look at the best stocks. We have a team of fundamental guys who are working very hard to pick for us the stocks that are fundamentally very strong, as well as we have a technical team who is also giving people ideas where they can enter, where they can exit. For sure, everybody will enter as per their own risk appetite, but just so you know that we do have premium membership where you can just enter down in the description below. And yeah, I think that is a very good ending note. We are at a point that we are a little bit optimistic, but we are also not very optimistic so much that we are just going ahead and buying everything and not just going gung ho. What I understand from you is that rather than going all in at this time, just
Yeah.
wait and see, and not even wait and see. Just keep doing your investment at regular interval, which you call it as dollar cost averaging. We will discuss in the next scenario, next podcast. So you're just saying, just keep buying it. Just keep buying it. Whenever it's going down, you go ahead and buy. Whenever it's going down, go ahead and buy. Buy on the red days, sell on the green days. I think that's is something that you are referring to.
Stick to your plan, and we are going to share the plan.
Sure, inshallah. I think do you have any other points to make?
No, we will share a lot of other stuff, a lot of exciting news, a lot of exciting or insights in NASDAQ, in different companies, in exciting companies,
Oh,
and
yeah, yeah. Well,
a lot
I
of information to share.
I think that's up. We are having a very good start. Let us just go ahead and we will go ahead and end this podcast here. And we'll see to our viewers. Please join us next time. I would like you to subscribe and press the bell button so that if we are having anything live or anything up to date, you will be first to be notified. Thank you very much, Abu Larry, for your time.
Thank you very much, Abu Haroon. Thank you, guys.
Yeah. Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu alaikum.